On the second day of the new trading year, the world's oldest and longest standing market index hit a new record high. In trading last night, we saw real strength across the board in the US, but it was the market leaders, the blue chip stocks, the 30 stocks that make up the Dow Jones Industrial Index that led the market higher. And although it finished just below the 49,000 mark, the strength and the momentum in the Dow Jones Industrial Average at the moment is pointing towards a test of the 50,000 mark for the first time in history for the Dow Jones, possibly as early as this month, potentially even this week. Something to look out for in trading. But of course, that strength was also displayed in the S&P 500. It was up 0.2%. The Nasdaq up roughly the same, and some real support for some old favourites coming in. We saw strength in cryptocurrencies overnight, and that led many of the crypto-exposed stocks higher. Coinbase, one of the top performers, up 8% in trading overnight. The unfortunate news in terms of geopolitics has meant that there's been very good support for defence-related stocks, and Halliburton, another top performer in overnight trading, up 8%. But we've also got the US quarterly reporting season coming up very soon. And of course, it's traditionally led by the financial stocks. And JP Morgan up 2.6% in a night of general strength for financial stocks ahead of that reporting season that kicks off next week. So one to keep on the radar, particularly for those looking at broader US exposures. We do have some economic data out tonight. We're looking at the manufacturing PMIs. There's quite an argument going on in the analyst community in particular and amongst strategists around the market outlook. And the argument is that the market is no longer responding to the economic cycle. Instead, it's responding to monetary policy decisions and the actions of central banks. Now, while they've been talking a lot tougher game, and in some cases central banks have lifted rates, there has been very little decrease in the supply of money in the global system. And that it is that supply of money rather than the cost of it, which is the interest rate, but the sheer weight of all of that money that's been pumped in and it remains in the global monetary system is what's driving the market. So the manufacturing PMI is a bit of a test of that theory tonight. If we do see a market response to the data, that would suggest that the economic cycle is still in play. If, as we saw over the last few months, very little response to, or even contradictory responses to economic data, it does point to the idea that it's the monetary policy and the weight of money that's driving markets at the moment. And of course, that weight of money also explains the strength we're seeing in so many other assets. Gold, for example, up 2.6%. Oil was up almost 2% last night, although we did have some specific news around that. And of course, that relates to Venezuela. Now, there were some concerns that conflict in an oil-producing nation could see oil prices spike, but the numbers point the other way. Global oil production at the moment is a little over 100 million barrels a day. Venezuela produces less than 1 million. Now, the numbers are a bit rubbery here because a lot of Venezuela's production is unofficial. But nonetheless, if we assume that they're around a little bit less than 1% of global oil production, then it's unlikely that taking them offline would see oil prices spike, because at the moment, the forecast or consensus among analysts is that the excess oil being produced at the moment is around 3.8 million barrels a day. In other words, almost 4 times what Venezuela is currently producing. And so if Venezuela is going to have an impact on oil prices, it's much more likely to be the other way. Now, we're already expecting a glut of production, but the reality is Venezuela has the single nation's greatest supply of oil reserves. So if these reserves are going to be opened up, it increases global supply significantly and could see oil prices plummet. Now, we're already expecting surpluses, as I say, and the forecast amongst a number of analysts is for oil to drop to around $55 a barrel. I would suggest that if Venezuela does resume full production, and we're talking about years and potentially hundreds of billions of dollars, then that full production could mean that oil prices plunge even further than analysts are forecasting. So something to watch out for. It's more of a bigger picture story because that's not going to develop overnight, but something to watch out for, particularly if you have energy exposures in your portfolio. So we're looking at the potential there for Venezuelan oil. But of course, if there was an outbreak of peace in the Ukraine, we could see further pressure. And this does have an impact on share market performance. Looking at the US, airlines last year up 30%. Uh, ICE, the internal combustion engine car manufacturers, up 10%. And luxury good manufacturers were up 70%. And this, I think, speaks to the importance of the cost of energy to the broader economy. Even though consumer confidence in the US remains low, the spending on luxury goods suggests that it hasn't slowed spending. And that may well have to do with lower energy costs. In Australia, we're seeing a similar effect. So our transport sector, which includes airlines, is up 8%, vehicles up 24%. And so we're seeing an impact here too in terms of their cheaper inputs. For airlines in particular, oil costs are jet fuel costs are their single biggest expense. So falling oil prices could be very positive for airlines, something to watch out for. And of course, another area of exposure, and perhaps a user of oil we don't think of very often, is the fertilizer industry. And so if we see weakness in oil prices, that feeds into gas prices, which feeds directly into the chemicals that make up most of the key fertilizers. And in the US, we've seen Occidental down 20%. So lots of impacts from the potential for movement in oil prices, regardless of what happens in Venezuela, with the potential kicker that if Venezuelan production does come online, it adds further pressure to oil prices. Bad news for oil and gas explorers, and possibly bad news for some of the big holders of those oil and gas reserves, but possibly very good news for the broader global economy. And in looking at that principle that if there's a gold rush, it's sometimes more profitable to sell the shovels than it is to look for gold, we saw a big rally in oil refiners last night, because the assumption here is no matter who brings the production online, it'll have to be refined. So Valero, one of the top 3 refiners in the US, also one of the top performers overnight, its share price up 9% in a single session, and it led the big gains in US oil refiners. All of the refiners got a huge boost in overnight trading. Valero itself was already on the move. It's up 46% over the last year. Most analysts have a buy rating on it in the Moomoo community, one for those who are looking at selling shovels rather than looking for gold. We're also, of course, seeing a response in other stocks. And the second stock on our watch list today is Strategy. And with Bitcoin rising and taking a peak over 94,000 US dollars in trading this morning, it's no surprise that we saw real strength across the exposures. Now, Strategy as a stock has been close to decimated. It's trading at around 1/3 of its peak price. So a 5% jump in its price last night was some welcome relief to the pressure that Strategy has been under. Over the last 12 months, it's down more than 50%. However, a number of analysts are very bullish on the outlook for Bitcoin. We're seeing a number of analysts with predictions around 170,000 before the end of 2026. And while that looks like an extremely bullish call to me, if enough people get on board, we could see some extraordinary gains. And of course, there are those outliers calling for $1 million of Bitcoin. I don't put a lot of stock in that sort of call, but nonetheless, given the impact that we've seen on Strategy's share price and the impact we've seen on the cryptocurrencies themselves, there's no doubt that a number of analysts, a number of investors are running the ruler over Strategy right now. Groups like Citi have a strong buy on Strategy, targets of $325 for Citi, and others have targets above that $300 a share mark. Given it's now trading just below $165, some may see some potential in Strategy. And the last stock on our watch list today is the locally listed Monadelphous. Monadelphous trades on the ASX. It's in an engineering group and one of the best known that provides services to the mining and particularly the oil and gas drilling industries. It announced this morning a new contract with BHP with a worth of $175 million. Now, yesterday, Monadelphous shares were up 1.7% in a little bit of a concerning move ahead of this announcement, but nonetheless, we've seen real growth in its share price. It's up 86% over the course of the last 12 months. And that's a reflection of the improvement in its revenue, up 7% over that period, and its earnings, which are up 15%. So the more it earns, the more profit as a percentage drops through to the bottom line. Now, its revenues are forecast to grow to around $2.3 billion. That's approaching its current market cap at around $2.7 billion. So even though it's had a very good rise over the last 12 months, there may well be a valuation argument for Monadelphous. Analysts aren't that excited at this stage, despite the strength that we've seen in stocks like Valero in the US. But many have a hold rating. Citi does have a buy rating on Monadelphous, and those who think that the outlook for the energy industry might be improving could look at the earnings momentum in Monadelphous as one of the potential plays of the changing oil environment.